Brian, just wrapping our heads around, I guess, what's worrying investors. We know the rise of COVID cases is obviously something that investors are a little bit concerned about. We've also seen some mixed economic data come out over the last couple of weeks, but help us make sense, I guess, of the trading action that we've seen recently.
Yeah, it's been really interesting to see how it is that we actually kind of start with a little bit of enthusiasm in the day, and then it begins to fade as you go into the close. Perhaps some people are trying to pocket some profits after some decent gains over the last year and a half here. And the way that we're looking at things is that right now, people are really, we think, struggling with whether or not we are peaking with inflation, and also whether or not we're peaking with growth, not just economic growth, but with profit growth for corporate America and corporations around the world. So we think that it's really that inflation, is it or isn't it peaking? And then growth, have we also seen those peaks? And that when that comes together, that can create some choppiness in the market. And, I mean, in all fairness, we're only off over the last 4 or 5 days, probably about a percent and a half or so. So, that used to just be 1 day's worth of trading. And now it's something that we get a little bit more concerned about just because it's been so quiescent in the markets.
Brian, this is a question more about sentiment. I'm not asking specifically about Apple, but as an asset strategist, when you meet with your team and you get a major ruling from a federal court that could impact an entire industry, because this potentially could, what are the discussions like as you try to position or prepare for what may be coming down the pike when it's in regards, say, for tech?
Yeah, that's a great question. And we are positive on the NASDAQ. So when we're looking at relative positioning with our portfolios, we actually think that there's some decent longer term valuation opportunities in big cap tech. However, regulatory risks are a risk to a lot of those companies. They have very large profit margins, large market share, and that gets a lot of people's attention. And it's not just in the United States. It even extends outside of the U.S. If you just look at some of the rhetoric coming out of China with some of the regulations that have come out of what appears to be the blue, that has affected their markets, and it also affects the investment opportunities. And I think a good way to kind of think about it is that if we are entering into a period where maybe there's going to be a little bit more activism, a little bit more regulation of some of these larger companies, that doesn't have to be bad. We know from the history of regulation that sometimes a regulated industry is one that's actually somewhat insulated from competition and helps protect and give more visibility to their profits over time. So it doesn't have to be a bad thing. But what we see opportunities is more in smaller cap companies and mid cap, those that would likely be beneficiaries from a little bit more competition in these various industries.
And Brian, in your recent notes, you also pointed out that you're seeing opportunity overseas specifically, so in emerging markets. I guess when you're looking to identify opportunities overseas and when you're looking at some of these emerging markets, what are you looking for? I guess what's the most attractive to you?
Yeah, right now, we just had a call about this morning just to kind of reaffirm where it is that we're positioning things. And we have an overweight to emerging markets overall. But where we really like are some of those areas that were really the laggards. So areas like Latin America, emerging Europe, and then also if you think about the Middle East, North Africa, and South Africa, kind of that group. So basically EM ex China for the most part, because we think China needs to be treated a little bit differently, more from that bottom-up perspective, getting back to the previous comments about the regulatory risks. And if the government is going to be pushing for a little bit more egalitarian economic expansion here, who might be the beneficiaries as opposed to the very large tech companies that are over there?
This is going to be a sophomoric style question, but at the end of the day, most of us are concerned about, am I going to make a buck? And you can never time the market, but looking at everything, the potential headwinds going forward, and what's behind us, I mean, the S&P 500 up over 20% year to date. Is this the time, or how would you advise people who think too much of a good thing, I need to get out? Because I'm hearing from other analysts, not yet, we're still going to go up.
Yeah, that's always the challenge, because you don't necessarily want to time the market, but you also don't want to get too greedy, right? It can almost feel like you're trying to, if an elevator is falling, that you can just jump at the last minute. That's not typically a profitable strategy. The way that I look at it is that if you are losing sleep at night and worried about, have things gone too far too fast, then maybe you just have to reevaluate the overall picture of your portfolio. Have you let your winners run too far? are where you're actually now out of balance. So the idea is that, periodically rebalancing. You don't necessarily want to do that too frequently, because rebalancing, shifting from stocks to bonds, there's transaction costs, plus oftentimes momentum ends up doing quite well, where you want to let your winners ride. But to do it maybe annually, periodically, just take a look at your strategic allocation, where you want to be, and then where are you, and try to get back to that. And maybe it's going to help eliminate some of those doubts, or at least quiet them a little bit.